Hey traders, Gavin McMaster here from Options Trading IQ, and today I'm going to share a trade I'm looking at on TLT, which is the bond ETF, and it's a yearly covered call. Just before we look at the trade, a quick reminder that everything discussed is for educational purposes only, is general in nature, and does not take into account your personal circumstances. So I wanted to take a bit of an exposure to bonds. We think interest rates are probably going to be heading down. I'm also just looking for some defensive assets as well, looking to generate a yearly return in the range of sort of 8 to 12% with fairly low or limited risk. So basically what I'm looking at is actually going to go 400. So buying about 400 shares of TLT and then selling 4 covered calls. So just slightly out of the money. You can see TLT is trading about 98.52. And I'm going to look to sell the 100 strike, and I'm going out to August next year. So just under 12 months. And you can see they're generating a pretty large amount of premium. So the total profit potential, if we look here, is just under $2,700. And actually, it's going to be a little bit higher than that because we're holding the trade for such a long time and we're owning the underlying stock. We're going to receive significant dividends in this time as well. So TLT pays a dividend or dividend yield of roughly 3.67% at the moment. So if we're holding the stock for 11 months, our dividend yield for that time is probably likely to be about 3.36%. We're looking at about another $12.55 in dividends on top of this profit potential. So that's going to put us up close to about $4,000 in total profit potential. So I've plugged that information into my covered call calculator here. So we've got our expiration date, the current stock price, our strike price of 100, and the option premium of 520. With 4 contracts, we're going to generate about $2,080 in premium, and our stock gain is going to be the potential for about $592 in gain in the underlying stock or ETF if it goes up above 100. If it doesn't go above 100, that'll be our profit from the option premium. And what I'll sometimes do with this calculator, let's make this a little bit bigger, is I'll put in the anticipated dividends as well. So it's about $360 in yearly dividends. I'm going to say estimate holding the position for 11 months, going to get about $3.30 in dividends over that time. And you can see there, if the stock stays flat, we're going to get about a 10.5% return annualized. If the ETF goes up through 100, our return will be more like about 12.41%. So pretty good for a fairly low risk underlying. Happy to take some exposure to bonds as I'm starting to get a little bit older now as well, looking more for that income rather than growth. So I'm pretty happy with this idea. I'll keep you posted. If you've got any questions, feel free to reach out. Otherwise, enjoy your day and I'll talk to you soon.